from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, the web's hidden weak spot. An hour-long Fastly outage takes down a large swath of the internet. News sites like Bloomberg and shopping services like Amazon go dark. Even though they're back online, we will examine just how vulnerable we all are in a digital world. Plus, Bitcoin tumbles again as experts warn of a looming technical breakdown. We're going to talk to an angel crypto investor about how she stomachs the wild price swings. And fire in the forecast. California and the West are bracing for another year of raging wildfires. Just how bad will it get? And how are officials preparing? I'll ask the California Secretary of the Environment, Jared Blumenfeld, on the heels of Governor Newsom's massive funding to combat climate change. All those stories in a moment, but first, U.S. stocks hovering near a record Tuesday. Our Kriti Gupta has more. Kriti, break down the day.
Well, Emily, kind of a flat session today, which is why I want to dive right into the NASDAQ 100, because of course we know that's the concentrated index to look at. Just a few weeks ago, we were talking about some major selling pressure in this index. Now you're starting to see it inch just a little bit higher. Really tells you that some of that defensive trading is coming back into vogue and is showing up in the NASDAQ 100. While we're talking about tech stocks, I want to pivot really quickly to that meme stock mania, because that was really where a lot of the action was today. Just take a look at these intraday price swings. You really saw Wendy's join the likes of AMC and GameStop. Clover Health was really that outperformer, up a whopping 86%. This, of course, coming with the backing of Chamath, this big SPAC king. You really saw him make some comments that pushed that investment much, much higher, getting that retail bid behind it. And while we're talking about those individual stocks, you just mentioned that massive outage, that digital outage. Let's just look at Fastly shares, because that was actually perhaps a negative risk event, not stopping Fastly from doing too poorly on a 2-day time frame, almost 19% gain despite those outages. Emily, it's really interesting to see that tech is still in vogue, even though we have a lot of these risks still kind of circling the waters.
All right, Kriti, thanks so much for the breakdown. I want to stick with Fastly, the hosting service outage impacting a number of sites across the web, including Bloomberg.com, the New York Times, Reddit. And while the outage has been fixed, the company hasn't yet said what caused the issue. I want to bring in Bloomberg's Jackie Davalos for more. So, Jackie, a lot of people don't even know what Fastly is. What exactly do they do, and how could they impact such a giant portion of the internet?
Exactly. So Fastly is one of a handful of companies that have content distribution networks. Really what it is, it's a company that allows enterprises and governments to host a lot of data, and they disseminate it very quickly, high amounts of data very efficiently across various servers around the country, or around the world, really. And what happened today really underscores how fragile this interconnected internet infrastructure really is, given the amount of data that we're handling today.
Now, it sounds like Fastly hasn't disclosed why this happened. I mean, what do we know? Could a hack attack have been responsible for this?
So there wasn't any indication from the company, and they said that there was no evidence that this was a cyber attack. They chalked it up to it being a configuration issue, but in layman's terms, this could have been something as simple as human error or just a glitch. And so really what is at the core of that is it's a lot more, these systems are much more vulnerable than they appear. They are very high tech. But they are also very fragile at the same time. And so a small issue can really reverberate across thousands of servers in a very short amount of time.
All right, well, we'll continue to follow what exactly happened here. Hope to hear more from the company soon. Bloomberg's Jackie Davalos, thanks so much for that update. Meantime, the chief executive of the pipeline company hit by a ransomware attack last month has apologized to a U.S. Senate panel for the incident that paralyzed the East Coast's flow of gasoline, diesel, and jet fuel. CEO Joseph Blount said paying the ransom in order to have the company's IT systems unlocked was an almost impossible choice. Take a listen.
It was the hardest decision I've made in my 39 years in the energy industry, and I know how critical our pipeline is to the country, and I put the interests of the country first. I kept the information closely held because we were concerned about operational safety and security, and we wanted to stay focused on getting the pipeline back up and running. I believe with all my heart it was the right choice to make.
Meantime, the U.S. has now recovered almost all the Bitcoin ransom paid in that cyber attack, and this could signal that law enforcement is capable of pursuing these online criminals, even when they operate outside the nation's borders. Joining us to discuss, Alexis Bianchi, Elliptic Global Lead. Alexis, thanks so much for joining us. Elliptic tracks cryptocurrency, especially as it relates to financial crime. And you've been looking at this incident in particular. How exactly did the U.S. government get this Bitcoin back?
Yes, absolutely. I mean, it's a very interesting topic. We, at Elliptic, we're in the business of tracking the flow of funds in the blockchain. And what we've seen here, unfortunately, is just another event in ransomware. And so at Elliptic, we've done some key work in order to label the addresses that were used by the dark side ransom team here on the Colonial pipeline. This information that we were able to provide in our tools ultimately led to law enforcement to trace the funds in the Bitcoin blockchain and ultimately identify which wallets were used for the attack and the ransom payments.
In a ransomware attack, how common is it to get the money back, whether it's paid in cryptocurrency or not?
I would say it's definitely not frequent, and also it's very rarely publicly known. In fact, the payment of the ransoms themselves are very rarely publicly known. I think in this particular instance, some amazing work was done by the FBI and the Department of Justice, and they were able to effectively catch the Bitcoin as they were moving straight into a wallet for which they held the private keys. How they held those private keys is still unknown to this day. Whether or not we will find out is still to be seen.
So does this ransom being paid in crypto, how does that change the equation here? Because, I know there are concerns about Bitcoin and crypto transactions being anonymous, but clearly this proves they are not untraceable.
Absolutely, and in cryptocurrency, there's different shapes and sizes, and not all crypto assets are necessarily identical. And in Bitcoin in particular, we are operating on a public ledger, public blockchain. Anyone with an internet connection can consult which transactions are going on. What we do at Elliptic is help add some flavor to those transactions to understand exactly where they're flowing, where to and from. And in this particular case, the focus from our research team at identifying the addresses controlled by the dark side attackers, effectively lifted that sense of anonymity that may come with Bitcoin.
So I'm curious what this means for hacker strategy going forward. Will this discourage hackers from doing this at all, or from asking for the ransom to be paid in cryptocurrency?
I think it's definitely a big blow for ransomware attackers, which is, of course, good for our industry and good for the economy at large. Whether this will necessarily put an end to those practices is definitely not certain. I think what we've seen, definitely a professional opinion, is that gone are the days where operating in ransomware required some very advanced technical skills. Today, these attackers operate under a ransomware as a service model, where there is one single developer, in this instance DarkSide, that manufactures the malware and the code, and then you have effectively affiliates that are responsible for penetrating a victim's system or infrastructure and deploying that code. As this type of activity becomes even more accessible, I think we'll see a tug of war between the simplicity to run these attacks, but also the strides made by law enforcement to control them.
How big a blow is this to Bitcoin, given that much of the audience, the investors, the supporters are excited about the fact that it is anti-establishment, perhaps outside of the traditional realm?
I mean, I would say that maybe that position has evolved, particularly over the last few years, where institutional buy-in and interest in cryptocurrencies have risen dramatically. I think for the adoption and the mainstream development of cryptocurrencies, this is good news. The fact that tools like Elliptics are here to make sure that customers are protected, but also the evidence that we provide in our tools enable exchanges and other businesses that work with crypto to be protected from laundering potentially proceeds of crime. So I think I wouldn't necessarily see this as bad news. Ransomware has been around a long time. I think the additional scrutiny that is being imposed by government on having the right policies in place, and this latest piece of news from the FBI and the DOJ certainly indicates that Bitcoin is not necessarily the place to carry out these activities.
All right, fascinating what you were able to uncover here. Alexis Bianchi of Elliptic Global, a company that tracks cryptocurrency. Thank you so much for joining us. Coming up, the Crypto Crunch. We're going to stay with Bitcoin and dive deeper into its 2-week low. Why are analysts pointing to a looming, quote-unquote, technical breakdown? That is next. This is Bloomberg. Bitcoin slumped to a 2-week low, with analysts pointing to a quote-unquote technical breakdown, as well as the recovery of Colonial Pipeline's ransom in Bitcoin as evidence that crypto isn't beyond government control. Bloomberg's Ed Ludlow has the latest. Ed, what do they mean by technical breakdown?
Yeah, I think, look, we've come a long way from this mid-April high of around $65,000. If you look over the last month, there's just a clear downward trend, and a lot of the market paying attention to what happens if we touch $30,000 for Bitcoin. Does it bounce back up, or does it continue to fall? In terms of its being in overbought territory, one technical indicator, it is in overbought territory if you look at its relative strength index. So investors are wondering, what's going to turn the corner for Bitcoin? It cannot catch a break, in the words of Bloomberg Intelligence's Michael McGlone. But I found something else. Come with me into my Bloomberg terminal and take a look at this chart. The blue line is AMC. Yeah, bear with me. The meme stock, AMC. You can see it's been on a bit of a tear recently. The white line, Bitcoin. And down the bottom panel, there is a negative correlation here. So when the meme stocks are going up, we see Bitcoin fall away. It raises the question, who's in this market? Are these the same retail investors that are selling Bitcoin to fund their purchases of meme stocks? I just thought it was an interesting point. The final thing, come back to me in the studio. The shine has come off Bitcoin. Year to date, it was doing so well. Orange line, fallen away. It's underperforming the MSCI All World Index and Equity Index. It's underperforming now the Bloomberg Commodity Index. It's on its way to have similar year-to-date performance to gold. And so the shine's really worn off. Something to think about. Emily.
All right. Thanks for the thought. Bloomberg's Ed Ludlow. Thank you. All right, I want to stick with Bitcoin and more losses. Joining us now, an angel investor who focuses on cryptocurrency and the former CFO of Earn.com, Lily Liu. Lily, thank you so much for joining us. So the volatility, it's been going on for several weeks now, and it's not just apparently because of Elon Musk. Why is this still happening?
Bitcoin's always been extremely volatile. Since I've been doing this 2013, 2014, we've had plus 10, minus 10%, or even more daily swings for a long time. That's just kind of how Bitcoin is. But if you really zoom out and look at this over a multi-year time frame, it's a pretty unmistakable trend of being up and to the right. And we had Bitcoin, just really sort of go through the ceiling for about the last 6 months. And so I think it would only be natural that it's not going to do that forever, right? I think it would be natural that we have some sort of pullback. And so, as Ed said, I think there is a technical level around 30K. We're all watching that, and we'll see what happens.
So the question is this going to be a multi-year down cycle like last time, or are we going to kick out of this sooner than we think?
I'm really not sure we're going to have a 3-year down cycle like we did from 2013 to 2017 and 2017 till now. To me, what's really fueling this is honestly what folks are doing macroeconomic policy, right? We've had, trillions of dollars being printed and spent. I think it was something like $6 trillion alone in the year 2020, and it's ongoing. And I think a lot of people, when they looked at that, from institutions down to, just ordinary people, they thought, maybe I should find a hedge against that. So typically that's been gold. And a lot of people started looking at Bitcoin thinking that, at the very least, this looks a little bit to me like digital gold, right? A little bit like gold, store value, but updated a little bit for the digital age. And I think that's a narrative that really took hold last year and, even now. But I also don't think we're going to have, this major sort of peak and trough like we did the last couple of cycles. I think this time around, a lot of the applications, a lot of the use cases that were promised in cryptocurrency, we're actually starting to see.
I mentioned Elon at the top, and I wonder if you think, given that his comments certainly propelled some of the latest volatility, do you think his influence on this market is unhealthy?
I think Elon is having fun with this. I think that his comments in their actual substance are really hard to take very seriously. For him to come back after, a month or so of saying, oh, I didn't know that it has an energy profile. I mean, honestly, it's just pretty disingenuous. That's like saying you don't know where meat comes from, right? It's hard for me to think that many people are actually taking that comment seriously in its substance. So he's certainly sort of triggered an upswing, also triggered a little bit of a downswing here. I think that Bitcoin has many other things that are sort of driving the market dynamics. And so I'm not too concerned about Elon Musk kind of longer term. And I think that, this has kind of been the industry's maiden voyage with him. And I think that there's also been a number of people in the industry that have, just kind of stopped listening to what he's saying.
Meantime, you just came back from the massive Bitcoin crypto conference in Miami, and still, a massive amount of people there, and yet still it feels like mainstream audiences are still trying to understand this. Do you think we're at an inflection point, or have we passed that?
I think there is still so much potential for the broader sort of blockchain, cryptocurrency, digital assets industry. I think that where we are even now, right, is still like really just early innings. For a while, years ago, it was really just Bitcoin, and there's like this whole ICO boom from a few years ago. But now we really are seeing something that appeals to such a spectrum of potential folks to get into this industry. I mean, one thing that is really substantial, decentralized finance, we call it DeFi for short. That is, there's like $60 billion today locked into various decentralized finance platforms. And that's real, right? So it's not just sort of purely speculative up and down, up and down again and again. There's actually sort of real utility coming to this ecosystem.
Now, you're investing across the crypto landscape, and I'm curious where you're putting your money and also how you stomach these wild swings. I mean, obviously you've been doing this for years, but with the microscope on these big price swings, it's just a reminder of how hard your iron stomach really needs to be.
Look, I'm not going to lie, it's not fun, right? 2 weeks ago, there was like a 50% drop over the course of a week, and that's absolutely hard to stomach. For me, I think when I think about sort of where a lot of value is going to be created in the future, again, decentralized finance is something I find to be tremendously exciting. Fundamentally, what you've got liquidity pools that previously have always been managed and priced and so on and so forth by banks. That's the purpose of a bank, right? And now you essentially have the ability to do this with computer code, which is like so crazy to even think about, but you can essentially self-custody, right? A large amount of money, actually, just even in your browser, and do pretty complex transactions with it. So that to me is really the start of something phenomenal. That's where I'm spending a lot of my time and looking for both platforms and applications that really facilitate that. Up until now, the Ethereum, which is also fairly prominent. Ethereum has kind of been the platform for a lot of decentralized finance, but I think there's a number of other competitors who are really making strides in that space. But no question, Emily, when you wake up and there's, like 20% drawdown, it doesn't feel great. But we just have to stay focused on the long term.
Well, yeah, thanks for being honest. Lily Liu, angel investor, thanks so much for joining us and taking the time. All right, coming up, securing supply chains. We're going to hear about President Biden's latest plan to boost chip production in the United States. All those details next. And speaking of chips, Micron shares slumping Tuesday. Researchers at Rosenblatt Securities saying it could be due to concerns over memory chip prices and demand for PCs the second half of the year. We'll keep following this. This is Bloomberg.
We really wanted to bring more transparency to crypto. And we were a company that had our controls in place, that had our management team in place, that had thought really hard about what it took to become a public company. And the journey started much earlier than 2021. I mean, we were on this path for over a year, but ultimately decided it was time that crypto had emerged as an asset class that was broadly ready for the public markets and wanted to take that step forward. The hardest part of a direct listing is connecting the supply and the demand. You're not allowed to ask your investors what they plan to sell, and so you go in with a lot of unknowns, and that creates volatility, that creates a bumpy path. And so we spend a lot of time educating our employees, but the market does not understand these dynamics as well as I would like them to. And so I think over time, as there's more direct listings, I think perhaps there could be some changes to Reg M that would enable more about potential supply, but that is the most difficult part, in my opinion.
Coinbase CFO Alicia Haas there speaking at the Bloomberg Deals Summit. And sticking with crypto, an update on a story we continue to follow. Enterprise software company MicroStrategy has boosted the size of its junk bond sale to fund the purchase of what else but more Bitcoin. Instead of issuing $400 million in its debut deal, it'll now issue $500 million, according to sources. The CEO, Michael Saylor, is renowned, of course, for his bullish views on cryptocurrencies, making it a key part of his corporate strategy. Coming up, California Governor Gavin Newsom proposes a record spending budget of more than $11 billion to fight and adapt to climate change. We're going to talk about that historic proposal with California Secretary for Environmental Protection, Jared Blumenfeld, next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Let's get back to the markets and one of the big movers with our Ed Ludlow. Ed, what are you following?
Tesla, taking a look at Tesla, started so brightly on Tuesday, opening up 3%, but by the close of play, down by almost 0.3%. Two big pieces of news. The first, one man, Jerome Guillen, a longtime leader at Tesla, one of the core pieces of the management team, left the company on June the 3rd. It was a big unexpected move. He was recently promoted to lead the semi-truck business, the heavy trucking project that Tesla's trying to get off the ground. And it was announced that he'd left. The shares took a hit in after hours, and a lot of questions about why, given his recent sideways move. There he is. And as you can see, Tesla relies so heavily on Elon Musk, but he was one of the key guys. So a lot of questions in the market about what happened. Beyond that, the other big thing is China. Shipments from Shanghai plant rebounded in May, up almost 30% from April. There is intense focus on China. Come with me into my Bloomberg and take a look at this chart. It is one of the regions for Tesla that continues to grow while revenue from the likes of North America, from countries in Europe, starts to plateau somewhat. So it's really a positive sign for investors that they're seeing that ramp up out of Shanghai continue, partly because they're also higher margins as well. Tesla's done a lot with the supply chain. They're localizing it, boosting margins on Shanghai-built cars. But really, it's been a lackluster year so far, year to date for Tesla. You can see really underperforming the S&P 500 after such an incredible run in 2020. A lot of headlines, a lot of tweets from Elon Musk, and investors really wanting to see some focus on execution. Emily.
All right, Ed, Ed Ludlow, thanks so much for the roundup. I want to stay with EVs and clean energy. California Governor Gavin Newsom has recently proposed a record $11.8 billion package over multiple years to combat climate change challenges. The proposal includes resources to fight wildfires and drought and to accelerate the state's goal of developing a zero-emission vehicle market. Joining us now for more, California Secretary for Environmental Protection, Jared Blumenfeld. Secretary Blumenfeld, thank you so much for joining us. As you and I have discussed in the past, the problem with climate change is just so massive. Can even this amount of money make as big a dent as you want it to?
Well, it's a good down payment, and I think it's an important first step in saying, last year the governor came out really clearly and said we need to move away from the internal combustion engine by 2035, and that really takes a lot of investment, and we're part of that puzzle, part of that picture. And so we put $3.2 billion into just the EV market, really looking at some heavy duty sectors. We're looking at things like school buses. I just was with Lion 2 minutes ago looking at their electric school buses. We're looking at trucks that go from the ports of LA and Oakland to warehouses called drayage trucks. We're looking at transit buses, as well as really boosting the passenger vehicle market. So it's an all of the above strategy. The 11 billion, as you mentioned, deals with things like drinking water, drought, which unfortunately we're now back in the middle of. So we're doing two things, Emily. We're dealing with the impacts of climate change, which would be in the resiliency space, everything from the impacts of heat to wildfires to drought. And then we're looking at how to reduce and mitigate our greenhouse gas emissions, everything from recycling to electric vehicles. So it's an all of the above strategy, and it really kind of, I think, pushes California to the forefront of action in this space. And at the same time, the governor has asked us to do things like look at setting a date to end oil extraction in California.
Right. Now, this money is to be spent over 3 years, and obviously we have a recall election looming. How solid is that commitment on the outside chance that Governor Newsom doesn't stay in office?
Well, he's going to stay in office, so I'm a betting man. I know he's going to stay in office. So that part, I think his commitment to these issues is clear, and so is the legislature. So we've got a supermajority in both houses. And in the example of electric vehicles, for instance, we put forward $3.2 billion. They're now suggesting it be $3.9 billion. So the numbers are going even further in the direction of combating climate change and taking this issue seriously.
The offshore wind leases are a key part of California's renewable energy plan, and there's a lot of controversy because the federal government has control of them. How do you ensure that California is going to get that power?
So it's been a 4-year fight with the last administration, and often people feel like administrations don't make a difference. It's very clear in the climate space, equity space, that the Biden administration is making a huge and rampant difference. And one of those is in the Department of Interior. Secretary Haaland basically told folks, we need to really ramp up offshore wind. And so there were some issues with the Department of Defense around where exercises could take place. We now had a really important first step, which was to say that we're going to put 400 square miles of California coast, both in middle part of the state and Northern California, towards wind resources. And it has to be an interplay between federal and state regulators. The offshore wind part is in federal waters, but in order to get the cables, the power onshore and the transmission, in order to make the upgrades at the port so that we can get the wind turbines, all those things have to be interplay between the state and federal government. And at the moment, it's going incredibly well.
The governor's goal to eliminate gas-powered cars completely is an ambitious one. I mean, how optimistic are you that will happen and on deadline? And what can consumers do to help?
So I have to be honest, I think we were all a little nervous last September when we did that. But fast forward to now, where you have Mary Barra from GM saying that they will be all electric by 2035. You have Bill Ford and others with the president driving the Lightning F-150 and numerous countries that have now overtaken California in our ambition to to move away from internal combustion engines towards zero emission by 2035. So what seemed fairly audacious and maybe beyond the stretch is now something that others are competing, and it's a great competition. In terms of the milestones, we're setting them, year by year, what we need to do, what the car companies need to do in order to get to those zero emission targets. And that's also helped by the Biden administration, who is reinstating our authority, which we believe we always maintain, but reinstating our authority to set stricter than federal regulations for vehicles.
Meantime, we're very focused on the carbon footprint of big tech. Amazon CEO Jeff Bezos has pledged $10 billion to fight climate change at the same time that Amazon and the online commercial economy in general is generating so much waste. Yeah, the cardboard boxes, the envelopes that go to your house. What more could a company like Amazon be doing, and how concerned are you about that, given online shopping only seems to be increasing?
Well, today's actually World Oceans Day, and unfortunately 10 million tons of plastic still goes into the world's ocean. So we can pat ourselves on the back, think we're doing a great job, but the reality is things like plastic that we just have way, way too much of. And you see the oil companies moving from transportation fuels using gasoline, petroleum, to plastics industry. And so we really want to make sure that we're not replacing one problem with another. And you're completely right. The cardboard box proliferation is a little bit insane. It got expanded because people were at home. We all were at home because of COVID. As we move back to the office, I think smarter shopping, to your point about what consumers can do, think about, one, let's really help our local businesses. So many were hurt by COVID and the economic impact. Let's go back to them. I collect vinyl records, which I guess are also made out of plastic. And I was like, I'm not going to shop online. I'm going to go to a local place here in Sacramento. And so I think shopping local helps bring back the economy, gets rid of some of the plastic, the boxes, the packaging, and is exactly what we need right now.
All right. Well, if we want to listen to some good music, we know where to go. Jared Blumenfeld, California Secretary for Environmental Protection. Thanks so much, Secretary, for taking the time.
Thank you. Take care.
All right. Coming up, the automotive data startup Wejo joins the SPAC wave to go public in a $1.1 billion deal. We're going to speak to the founder and CEO, Richard Barlow, next about how he plans to use this opportunity to make our roads, cars, and traffic all better. This is Bloomberg. Welcome back. Let's take a look at some other stories we've been following. Further details are emerging about the cyber attack on the world's largest meat producer, JBS. Researchers say the hackers explored the potential attack back in February and stole data for months from the company's locations in Australia and Brazil. Also, 3 former JBS employees have told Bloomberg that the meat producer declined to spend more on cybersecurity because it wasn't considered a priority and it was too expensive. And President Biden has come out with a plan to secure supply chains in products ranging from medicines to microchips. A task force will focus on supply-demand mismatches and deal with near-term bottlenecks that could affect the economic recovery. The administration noted in its assessment that technological changes and increased cyber attacks require new thinking to ensure more local manufacturing. Meantime, global sales of battery-powered electric cars surged to more than 2 million in 2020, doubling the number from the year before. More EVs also means more computers, more semiconductors, and ultimately more data generated by these cars. Wejo is a British startup backed by GM that uses this data to help in infrastructure design, road safety, and fleet management. We're joined now by CEO and founder Richard Barlow. Richard, thanks so much for joining us. So you're planning to SPAC. Why SPAC now, and why not do a traditional IPO?
So we've raised over $150 million from the private markets historically, but we're at a point now where we've got huge demand from OEMs globally, most manufacturers globally, to deliver more and more product. And we felt the public markets were now right for us to do a substantial raise. And as you've seen, we're raising over $300 million from the SPAC and the PIPE.
So you pull together trillions of connected data points, and I'm curious, who are you selling your services to, and how do you make money on that?
So we provide trend data to the likes of departments of transport so they can understand flows of traffic in cities. We're providing data to mapping companies to help improve their product. We're providing data back to parking companies to understand about curbside parking behavior. We're providing data insights back to motor manufacturers to have better understandings about how their cars are being driven and treated.
I'm curious how you feel about cars in an increasingly connected world. Are you concerned about cyber attacks and this new level of threats we're seeing on, not just every company, but all of us?
So I set up Wejo to mean WeJourney. This focus on data privacy, security, and trust is something that we've majored on from day one. We're ISO 27001, we're 27005, but we're more than that. As a business, we work with most manufacturers. We work with how they protect their data. We work with how we can protect data from cyber attacks. So it's something that we very much are aligned with in industry, and we have not had an attack. We work with OEMs to help them not be attacked and protect data and protect consumers' data.
So I'm curious then how potential regulation could impact your company, given that obviously we've got GDPR in Europe and an increasing focus on data in general, and I'm sure that will ultimately extend to the data generated by cars.
Yes, in America you've got the California Consumer Privacy Act, and that's becoming federal. You've got the Right to Repair Act, or that's been considered as well. There's California Privacy Act, or CCPA 2. That's been considered now. We are compliant with all standards, but it's more than just compliance. We go way beyond compliance. We consider about what's right for the consumer. We have this mantra of data for good. It's this idea of actually it's got to be right for the regulator, it's got to be right for the consumer, the driver of the vehicle. It's going to be right for the motor manufacturer as well. It's going to be right for everyone in terms of how data is being treated, so that it's not abused.
All right. Well, we'll keep our eye on your SPAC. Thanks so much for taking the time to join us. Wejo founder and CEO, Richard Barlow there. Okay, coming up. Amazon, preparing for its next adventure, the e-commerce giant will offer 6-month prescriptions for a very reasonable price. We're going to talk about the company's latest move next. And Stitch Fix shares soaring after the personal styling company posted better than expected third quarter results. Its outlook also seen as strong, a sign that folks are starting to get out and about again and care about how they look doing it. This is Bloomberg. Whether it'll be a rally in the crypto world or a new SPAC deal, the two have made their mark in how companies operate and look ahead to the future. IAC CEO Joey Levin spoke with Bloomberg's Katie Roof about what is next for his company at the Bloomberg Deals Virtual Summit.
We're debating now actively something I'm pretty excited about, a lot of us are pretty excited about, which is turning the incubator to focus very, very heavily on crypto, which is, I think, a really exciting future in a lot of different categories.
Why are you so excited about crypto?
Well, it reminds me of changes like web and mobile, which were so fundamental to how certain categories evolved. It wasn't changing the dynamics of the category, it was just a better way to deliver. So web was, and internet was a better way to deliver services, like ticketing was an early one for us, or travel, or really every category. Obviously now internet is fundamental, and web presence is fundamental to delivering a service. And that next phase was mobile, and Tinder actually came out of our mobile incubator. That incubator was designed to build mobile businesses. It was right after the iPhone came out, and it was right after the App Store came out, and all these apps were being developed for the App Store. And we said, let's build in this area and focus businesses in this area, because we think it's a better way of doing things and a fundamental way of changing the changing the way people interact. And I think the same could be true for crypto and how it changes the way industries operate. It just makes them more efficient. some of the fundamental underlying things there are better ways of doing practices that have existed for 50 decades or centuries are just going to be more efficient when done when done on a blockchain.
Tell me about your philosophy on spinning off businesses. Recently at Vimeo, in the past, there's been Expedia. So just tell me why you do this.
At some point, each of these businesses, it can probably do better on its own. It makes sense on its own. It's got enough stability in its business that a unique currency for that business, it's got enough of a trajectory in the business that a unique currency starts to make sense. Vimeo, the most recent one you mentioned, is in a category. It's enterprise software as a service. That is a category that's very attractive to investors right now, and Vimeo is certainly being aggressive in that category in terms of expansion with employees and expansion looking at acquisitions and things like that. And so to have a currency that's competitive with others in the category, I think is going to be valuable to the business.
Will you spin off any companies into a SPAC, or what do you think of SPACs?
Not a SPAC fan. I'm a SPAC fan in that I'm glad that other people are doing them. I'm glad that there's a market to get these companies public, and so a lot of companies will be sort of under the public light, which I think is healthy for a lot of people, that people can invest in these things. People can bet on them. People can bet against them. I think that's all healthy for the ecosystem. I don't think we're likely to sell a company to a SPAC or do a SPAC. Some of the sort of fundamental components of a SPAC don't really resonate with us. We spend a lot of time building companies, and people do unbelievable work to build a company and get it to a point where it's created real value and it's worthy of either further investment or being in the public markets and all that. And I don't really see why you'd go through all that work to build a company and then hand over the keys at a critical point to somebody else.
IAC CEO Joey Levin there at the Bloomberg Deals Summit. Meantime, Amazon will now offer 6-month prescriptions starting at $6 as part of the company's latest attempt to move consumers to buy drugs online and not in the store. I want to get details from Bloomberg's Spencer Soper. So, Spencer, most insurers won't even cover 6-month prescriptions. Talk about Amazon's strategy here as a way in.
Yeah, so Amazon's really targeting people who buy prescriptions with cash. So this would be both people who are uninsured, as well as a lot of people who have insurance but also have very high deductibles with the insurance, so they're cash-paying customers as well. So you end up with a pretty large market. You know, the overall prescription drug market is about $350 billion, but a large slice of that are people who actually pay cash for their drugs. And so then the 6-month prescription will help Amazon buy pills in bulk and offer bigger discounts. And then also it'll just be one delivery, 2 deliveries a year for a year's worth of medication as opposed to like a monthly delivery, which also keeps Amazon's costs down.
But what about the prescriptions that crop up on a, daily, month-to-month basis, the ones that you can't necessarily plan so far ahead for?
Yeah, so this is more people on long-time maintenance medications. The things that they're offering this on are common high blood pressure medications and high cholesterol medications and managing diabetes, that sort of thing. So, yeah, they're not looking for someone who got an ear infection and needs a quick antibiotic. It's more for these, long-term maintenance medications.
Now, as much as it's convenient to order online for many people, you can't go down a block on any main street without passing a pharmacy. How hard is it going to be for Amazon to break into this market?
Yeah, that is a key challenge, is emphasizing the convenience factor when so many people have pharmacies close by. They're as abundant as, gas stations and fast food joints, So that's the thing is getting people to change this behavior. The pandemic was obviously a good opportunity, but that window's closing with people just worried about going to other stores and that sort of thing. But so Amazon has to try to dislodge people from their existing routine, which is difficult, especially with a prescription, because you have to shift paperwork over, that sort of thing. So that is going to be a key challenge for them.
Amazon bought PillPack, the online pharmacy, in 2018. Quickly, how does this build on that acquisition?
Well, the difference here is PillPack specialized in people who take multiple medications, and it would send them like all of those medicines in a daily packet to make it convenient for them to keep track of everything they were taking. And this is more for folks who aren't on that big of a medication regimen. People are taking maybe a daily maintenance medication like the high blood pressure thing we talked about earlier. So this would be more to appeal to them, a broader customer base.
All right. Bloomberg Spencer Soper, thanks so much for bringing us that story. Development will continue to follow. And that does it for this edition of Bloomberg Technology. Tune in tomorrow. We're going to be joined by FireEye CEO Kevin Mandia. You won't want to miss it. That's all for now. I'm Emily Chang. This is Bloomberg.